So if you had to go out and buy your current house right now, would you actually be able to afford it? That's what we're going by the numbers on. This is from Redfin. 40% of homeowners say, no, they could not afford to make the same purchase today. In other words, buy their own house. You look at rates. This is it. The average 30-year fixed-rate mortgage is 7.17%. Now, you go back and compare that. Rates were under 3 a year ago, and that's why 70% of homeowners say they're not willing to sell right now because they know they go out and get the next house and they'd have to pay so much more in interest. In the real estate world, they call this the lock-in effect. Now, what has that led to? Well, 1.3 million fewer homes being sold, both in 2022 and 2023. Now, we're going to talk about this more in a moment. While Fed rate cuts could be coming later this year, a little bit later than we thought, this number here from Fannie Mae is predicting the average 30-year mortgage will only go down at the end of the year to 6.4%, which, compared to years and years ago might not be that high, but it's certainly still high compared to recent years. So that's by the numbers. With that, let's bring Peter Morici in on all of this. Peter's an economist and professor emeritus at the University of Maryland Business School. All right, Peter, good to see you. Haven't seen you in a while. Thank you for coming on. I want to make this discussion big picture, if I can, just on the economy. That's housing. But, this week we had lower growth than expected. That came in yesterday for last quarter, 1.6% annual growth. We had an inflation number this morning. That's the Fed's favorite gauge of inflation, 2.7% rate. So that's above 2, which is their target. So where do you see the economy right now, big picture?
Well, I think the economy is slowing. That's natural, given the fast pace of growth of recent years and the recovery we had from COVID. And inflation hasn't gone away. I know this sounds heretical, but the basic problem is the Fed didn't hit the brakes hard enough. It didn't push interest rates. The lesson that we've learned over time is that when you have inflation, you have to take a hit, namely a recession. In 100 different circumstances across 56 countries where central banks hit the brakes hard and hold them till they get inflation to the target and then release, or if you assess over a 5-year period, they actually do better because they catch up all the growth they missed and then they continue growing without inflation. Whereas if they do a partial job like this, which we did in the 70s repeatedly, then you end up having to hit the brakes again and again and again. So we're kind of in a tough spot.
Well, Peter, we're Americans. We don't like pain, so we don't like to go through periods like that, even if they're necessary. And that's kind of how we end up in this situation. So that brings up the question about what kind of a landing we do end up getting in this economy. There's been this debate about a quote-unquote soft landing or not. Jamie Dimon, of course, from J.P. Morgan, was asked about that and had this to say. Watch.
It's under 4%. It's been there for 2 years. Housing prices are up. Stock prices are up. Jobs are plentiful. Wages are finally going up at the low end. The consumer's in pretty good shape. The one thing you got to be cautious about, a lot of it's driven by just fiscal spending. So even today, the deficit is 6% of GDP, almost $2 trillion. That's driving a lot of this growth, and that will have other consequences possibly down the road.
That could prevent us from getting that quote-unquote soft landing, right? Those concerns that he's outlining, but take it from there.
Well, I think that the economy will continue to grow because of things like student debt forgiveness and all the money that Mr. Biden is spending on his industrial policies, in chips and cars and so forth. But the economy is already at full employment, and so it'll likely mean inflation, and people will continue to hurt at the grocery store. We can keep this economy growing at, around 2% a year if we're willing to put up with 3 to 4% inflation. I would suggest that's not going to be a good solution for Mr. Biden, but it's already too late to do anything about it before the election. If the Fed hits the brakes now, which it's not going to, but suppose it did, at its May meeting, then the economy would tumble in the summer, and that would be a great environment for who's ever the Republican nominee. Presumably, Mr. Trump, he would be able to make hay with that, and it would be very tough on Mr. Biden. This is very much a political economic problem, not just an economic problem.
So when do you think they will cut rates then? Right before the election, right after the election? When will the Fed actually move, if you had to guess?
I think that the Fed will cut just before the election, and I think that will be Powell's way of voting against Trump, to be quite honest with you.
You think it's that political? Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.